Here today to discuss the financial markets, we're joined by Sebastien Di Iorio from PBS Investments. So, Sebastien, we've seen a big move in October this month, but the question surely has to be, is the credit cycle now about to turn?
Yes, thank you. Well, I guess clearly we're seeing a big disconnect between stocks and credit. Here on this chart you can see the golden line is the S&P 500, while the blue line is the high-yield US high-yield index. What you can see is that even though stocks rallied strongly off the lows in September, distressed credit did not perform as well. And we think the reason is really that the credit cycle is turning, which should not make people afraid because it's not a reason to sell stocks. However, it's a sign that we're still in an expansionary phase where credit underperforms. Stocks tend to outperform, but leverage is high. You tend to see more speculative deals involving larger companies, and therefore one has to be selective and be prepared for important rotations.
Okay, that makes sense. Well, let's have a look at the US markets then. How would you describe conditions there?
Well, right now in the US, what you can see is that even though stocks have rallied strongly, the participation, meaning the number of stocks that rallied, is quite low. And we think this is because we're in this phase of the cycle where large caps or even mega caps are taking over. And this is quite important for investors because it means that we're entering also a new volatility regime and that the risk of higher drawdown is increasing.
Okay, well, what about for investors then? With these movements in markets, there are bound to be some opportunities, but where are you foreseeing those?
Well, at the moment, I would say not surprisingly, we really like Europe and Japan with a bias towards Europe. However, we think investors should not play Europe through indexes. The reason being that the valuation trade, meaning the multiple expansion trade, is done. So one has to look more into bottom-up approaches like quality or income in equities to generate good risk-adjusted returns.
Okay, Sebastien, thank you very much.
Thank you very much.
And thank you for watching. Be sure to click back to Dukascopy TV for more updates and exclusive interviews. We'll see you next time.